In this video, I'm going to be telling you what supply and demand is all about. Understanding why it is one of the best things for you to ever learn as a trader, and understanding how it's going to really make you see the market in a totally different light and in a very simple light without using indicators or chart patterns or whatever. Let's dive into this very simple nitty-gritty of what supply and demand really is. What really is supply? What really is demand? I have with me right here a whiteboard which we're going to be using. So, what is supply and what is demand? Pardon my handwriting. I don't know how to write very well with pens and pencil. I use the keyboard a lot more, but I just want to illustrate with my fingers in this case. So what really is supply and demand? We're going to start with the easiest one you can understand, as we are consumers, so therefore we tend to understand demand more. Demand is the request for an item, is the want of an item, is the consumption of an item. So request, want, consumption, or necessity, whichever one you want to call it, right? So this is what demand is all about, of any item whatsoever, anything at all. Supply, on the other hand, is the production and availability. So this is the fact that something is not just produced, but is also available. It's available for use. That is, it's available for demand. Now, we all studied basic economics where we learned about supply and demand and how it relates to price. But just in case you've forgotten what it looks like, so there is demand's relationship with price. Going forward, I'm just going to be writing D. I think that's far more easier. So there's demand's situation with price, and then there's supply situation with price. And how do they work? Now, the more there is demand for something, the higher the price for that thing. So the more demand, the higher the demand. So this is demand and this is price. Sorry, I made a mistake. This is price and this is demand. So the higher of the demand, the higher the price. So at level 5 demand, there will be level 5 price. At level 1 demand, there will be level 1 price. But supply, on the other hand, is the exact opposite. The more there is supply of something, the lesser the price. So this is it. Now, if you notice, look at this chart, you realize that when price is at 3, it's equilibrium. That means it is flat, meaning this is the best place where price meets demand absolutely accurately. And then anything other than that is you moving price either higher and demand dying, or moving supply higher and demand low, or demand high and supply low. But price also changes alongside with those information every single time. So price doesn't just move in isolation, price move for multiple reasons. Now, what is the major reason why we say price moves due to supply and demand? It's a very simple situation. Let's look at the scenario where we just used supply and demand to determine price, right? So the more there is demand for an item, let's say we only have a fixed supply of 5,000 units of an item, 5,000 units, right? The more there is demand, the higher the price. And the less there is demand, so more demand, higher price. Less demand, lower price. That is the way it is. So the lower the demand, let's say this unit 5,000 comes every day. So there's a daily supply of 5,000 units. We have higher demand, higher price. The lower the demand, the lower the price. That's the way it is. Why? Because it's compounding every day. If the demand is dropping, the amount of stock left over will be going up. And you notice it because the amount of stock left over is going up, price is sinking. This is demand. This is demand here. If the amount of units is 5,000 every day and people who are requesting are more than 5,000 every day, that is the demand, the price will keep going upwards. So that's just the way it is regarding supply and demand. Now, in reality, when you look at how situation actually affects supply and demand, let's look at economic situation, right? Economic situation. Let's take um, Apple, for example. Apple as a fruit, not the phone, not your iPhone, right? Apple as a fruit. Let's assume every day we have 5,000 apples. Every day, 5,000 apples are entering the market. And every day we have 5,000 buyers. We can sell this apple at one box to everybody because it's being consumed every day, right? Now, let's say every day the 5,000 keeps coming, but now we have only 2,500 persons asking for it. Do you know what happens? The prices of the apple is going to drop because we want to make sure we finish the supply. So that this is because if we don't finish it, imagine apple actually gets spoiled within the day. So what happens is we're trying to make sure everything goes out. We'll have to now start selling at a cheaper rate at something around 0.5 cents. So this is what we'll start selling it at rather than $1. Now let's assume it's still getting a supply of 5,000 every day. But all of a sudden, there are 10,000 people coming to buy. We'll start selling the price of this at $2. Why? Why did we increase the price? Why did we not reduce the price when there were more people? Well, the logic is simple. Because there are more people in the market demanding for this item, and there are very few supply for the day. The supply is small for the day. What we'll have to do is we have to make sure only people who can afford it can get it. Meaning, too many people are available and too little items available. We're looking for the best buyer. We're looking for the best price. And then another thing you need to also understand is it's understanding auctions. It's like auction, whereby the highest bidder gets it. So in this case, it's more like the highest buyer gets it. So whosoever is willing to pay the better price gets the item. That's the way it works for apples as fruits. Now let's inverse the situation. Let's assume the stock available is growing every day. Let's say today it was 5,000, tomorrow it was 10,000. And it's the same 500 people that are 5,000 people that came to buy on both days. Because the stock increased in supply, we have to sell out everything. And there are few people buying it. So we have to make sure anybody that comes can actually buy enough. Not just enough, but more than enough. So therefore, we're going to start selling it at 0.5 again. Meaning, we want each person who has $1 to end up buying two apples. And because each person is buying two apples, we can end up spreading the 5,000 people into 10,000 apples, and we'll know that we have finished all the apples in our supply, waiting for tomorrow's supply. If tomorrow's supply comes out and it's 20,000, that this, like, the total number of apples supplied was 20,000, and we still have only 5,000 buyers available. That's 5,000 demand. This price is going to drop even further to about 25 cents, making each person have the ability to buy 4 apples with this same $1 that they came into the market with. So that's just the logic of understanding supply and demand. With this understanding, let's take a look at price charts now. So this is your current price chart of the Australian dollar against the Canadian dollar. What do you think is happening in this chart? You can drop it in the comment section below. And as you drop your comments, do well to hit the subscribe button. But let's see it. What we're seeing here is a situation where people are requesting for the item. The supply of the item is not enough. So people are requesting and it went up. People slowed down on their request. Either, if you see anything that has to do with a drop, it is either people slow down with their request or the amount of selling increased. So decided to sell more. And then what happened again? People started buying. Oh, it's becoming cheap. It's cheap. Let's buy. 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 And they bought. They bought and they bought and they bought and they bought and they bought. And people who were selling saw this price and said, "Oh, we like this price. We want to sell this market. We want to sell." And then we started selling, 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 selling. We sold down here. People bought again, bought again, bought again. They sold again, and they bought again and again and again. And you can see that it's a situation of people are buying because they feel like it's cheap. People are selling because they think it is. We have too many supply in our hands, and we keep doing it like that until we get to this level. Now, what are supply and demand zones? What are supply and demand zones? Supply and demand zones are, if you look at these levels of, if you look at all these prices we ended up getting down here. Imagine you as a smart person, right? You want to come into this market, you want to buy apples. Knowing that the market constantly dances up and down like this, I'm pretty sure you'd be looking for whenever price gets to either this amount or this amount to buy. That's what you will be looking for. You would not want to buy when it's this amount. Neither would you want to buy when it's this amount. You would avoid these two and you would go for this or this or this as a buyer, right? It's the same thing as what you see on the price charts, right? When you go to the price charts, when people look at the price charts, this is what they are seeing. This this is cheap. This right here, sorry, this right here is cheap, and this right here is expensive. We want it to be cheap so we can buy. This is expensive, we want it to be cheap, we can buy. It's expensive, we want it to be cheap so that we can buy. It's expensive, we want it to be cheap so that we can buy again. That is the way it works. So the idea is, as a buyer, when you want to buy in a market, if you want to buy a market, you'd be looking for where it is cheap. This is where it was cheap. This is where it's still cheap. This is where it's still cheap. This is where it seems like it is cheap. Now, the word cheap and expensive is absolutely relative, right? There are people who see cheap as, let's say, $1 because of the amount of money they have. There are some people who see $10 as cheap. There are some people who see $100 as cheap for the same item. But what really matters is, at what point do a lot of people come into the market? So if you look at it, obviously a person who has $100 and sees it as cheap is most likely going to come into that same market when he sees it at 10 because it is now overly cheap, right? Simple. Now let's flip it the other way around. There's some people who see $1 as expensive. There's some people who see $10 as expensive. There's some people who see $100 as expensive, right? If a person who is selling sees $100 as this is expensive, this is the place where I want to sell. A seller wants to sell something as expensive as possible, right? It's $100, this is where I want to sell so that I can make a lot of money before it becomes too cheap, right? $100 is like the most expensive place to sell. Now imagine you have been selling it at $1 and then you discover that you can now sell it at $10. What? And I've been throwing my stuff all this while. I'm going to come into the market and start selling at $10. So that's the way it is on the chart. Now let's look at the chart. So I'm just going to flip this stuff over and you can see it right here. So imagine the sellers at this level, right? People who are selling right now. When you want to sell, you're going to look at this place. This is where it's expensive. This is the price I would love to sell at. Oh, they've sold. I can't make profit, right? They've sold all the way down here. I can't make good profits. I hope and I wish it will come back up. And then it comes back up. Woo, this is a good amount to sell. This is where when I sell now, I can make a lot of money. And you sell it till you can no longer sell anymore. And then what happens? People start asking for the product, they ask for the product, it goes up again. Oh, it's cheap again. It's expensive again. Yeah, I want to sell, I want to sell, I want to sell. And they sell to the downside. Same thing again. Ooh, let's sell, let's sell, let's sell, let's sell. And they're trying to sell it even more. Now, I remember I said it's relative. Why did I use that term? It's relative. This is a replay. So why did I use that term relative? Well, it's very simple. It's a very simple situation. How is something relative? It depends on supply and demand. It depends on the supply of an item. For you as a buyer, it depends on the supply of an item. For you as a seller, it depends on the demand of an item. So cheap, expensive is a relative situation for the people involved. As a buyer, which most of us are in the market, why should you buy an item? You should buy an item because it is cheap in price. What makes you think an item at 10 bucks is cheap? Because when you look at the recent price history, when you look at the past and you look at the history of things regarding that particular item and the price of that particular item, this has been a cheap amount to buy it. So therefore, if it comes here, it is cheap to buy. Again, let me repeat this stuff. Let me repeat this stuff again. As a buyer in the market, if something is 10 bucks, I'll just go back. If something is 10 bucks, for you to determine if it is cheap, you have to look backwards and see the price behavior. If at most times it was greater than 10 bucks, then 10 bucks is a cheap amount for you to buy it. If at the past 10 bucks was not the lowest amount or a lower amount, then it's expensive for you to buy it. For selling, is the same thing. If you look at 10 bucks as an amount you want to sell, you want to look in the past and ask yourself, is this place an expensive amount where I can sell and make money? Or is it a cheap amount where if I sell, I will end up with losses because people will now come in and be able to buy it at a higher price? When you say relative, that is how you look at it. So when you look at the price chart, is this cheap? Is this cheap? That is what you ask yourself. Is this price cheap based on what has been happening all this while? It is cheap. Oh, so therefore, I will buy. If it is not cheap, I would not buy. I would sit on my hands and I would wait for the market to come to a cheap area. Now, it depends on days. So this is why you see when people say supply and demand zone. In this case, I'm looking at the day time frame, right? It depends on days. And in this case, looking at the situation, this market is cheap, or rather was cheap here, and now it's going up. It's looking a little bit expensive. If it goes beyond this level, it's way too expensive. In fact, it is overly expensive. For sellers, this looks like where they want to sell from. Ooh, we can sell from here so that we can take out our cash here. That is the way it is, all about supply and demand. Now, how does this relate to support and resistance? If you bought an item in the past, let's say you're fully aware of item pricing, right? You're fully aware of item pricing, and you've bought an item before in the past for anywhere around, let's say, an item used to be $5. It used to be $5 when you first bought it. And as time went on, you realize it's now 10 bucks. This is how support and resistance comes about. And then you said, I'm going to wait a while. Let's see if we can buy it. It's now 15 bucks. And for some reason, it comes down to 10 bucks. I'm pretty sure a lot of people are going to buy it, right? We're going to be buying it till the point it gets back to 15 bucks. And at some point, it's going to move up to 20 bucks. Now, imagine this same item that you know of. In the forthcoming days, it now becomes 5 bucks again. Do you know that because you have been looking at this level as 10 bucks, you see that you've constantly always bought at 10 bucks? What happens is that your psychology starts to see this 10 bucks as the fairest price ever. Meaning, if you should meet somebody who wants to sell this item for 15 for you, you tell him for what? For what? I ain't buying it. It's too expensive. So therefore, price would find its way back to 10 bucks. And at 10 bucks, not just you, mind you, there are a lot of market participants. A lot of market participants would have very similar mindsets. And because 10 bucks has now become the new norm, over time, supply is going to keep remaining the same way or even get better, and it drops back to 5 bucks. And it may even come down to 1 bucks. Do you know what we just did? This is what we just did. You see how this 10 bucks level converted from being a support zone where people felt it was good to stay and buy from, to now being a zone where sellers say this is the best place to sell because people are no longer going above this price to buy anything. This is how support and resistance comes out from supply and demand. So the last takeaway for you for this video is to know this. Every supply and demand you hear of is both technically, supply and demand is both technically and fundamentally correct. It's both technically and fundamentally obvious. So you can use supply and demand in both technicals and in both fundamentals. So what is support and resistance? Support and resistance is something that is purely technical. Basically, the price chart you are looking at is a technical chart. It's technical. So what do you do? What does this mean? It means every supply zone can act as a support or resistance based on where price is on the chart, and every demand zone can do the same thing on the chart. Let's look at the chart again one last time. So we have these zones. I'm going to look for an area where price tends to play around a lot. If we go back to the past, just a little bit in the past, I want you to observe this. Sellers saw this zone, this area, as a place where selling is the best place to sell from. If we are selling from here, this is one of the best place to ever sell this market from, right? This area. We saw price go down, it came back up. They said, oh, well, we want to sell now. They sold, it came back there. They sold again to the point where people wanted it more than normal. Now that they have sold so much to this level, they've realized that they should not sell here anymore. It is no longer a place where they should sell because people would buy it whether it goes up or not. So therefore, now this is the new sell area for them. This is the new sell area for people who are in this market. Looking at this market, what do you think is happening? Do you realize that a resistance zone, which is a place where sellers constantly feel like this is the best place to sell, has now become a support zone, meaning this is a place where sellers feel like if they are selling it is too cheap. It has become too cheap to sell at this level. It's becoming too cheap to sell at this level. That's simply how support and resistance turns into supply and demand. They've sold so much at this level and they realize that people constantly go above that amount. They now feel like that particular amount is now a cheap amount. If they sell it at that amount, it's selling for cheap. That is the way it is. If you inverse this situation, you can invert any chart, right? You inverse the situation, it's the same scenario for people who are buyers, right? People who are buyers or people who want to buy into a market is similar situation. What is it? So we've been buying at this price, saying that this is the cheapest price we can buy, and we realize that this price is always coming to fruition. You would want to test the seller. Oh, can you sell this stuff at 0.9995? We used to buy it at 0.9. We used to buy it at this high price. Can you sell it at this cheaper price? Oh, yes, I can sell it at this cheaper price for you. Ooh, they could sell it at a cheaper price. There's no way I will ever buy this for an expensive price ever again. And then it goes up, and you're like, I ain't buying. Nobody's gonna buy it. I'm not buying it. And the seller starts to take it down until you say, oh, now it's cheap again. Let me buy. And you do that. It comes back again. Oh, it's cheap again. Let me buy. And now that it has become cheap 3 times in a row, like, I think we can actually squeeze more out of the seller. Let's hope the seller actually sells this thing beyond this price. If they can sell it lower than this price for us to make more sense, yeah, right? Let us buy it from a lower price this time and see if they will agree. And that, my dear friends, is the way supply and demand works. And supply and demand leads you to support and resistance. So if you did learn something from this video, do well to hit the subscribe button. I would love to see you in the comments. Tell me what you think about the entire explanation, the analysis. If you feel it is too complex, you can tell me in the section below. What markets are you actually looking at right now that you feel has a support to resistance zone, or basically a supply and demand zone that you are paying attention to? I'd like to chat with you guys. See you all in the next one. Peace.